Good morning this Wednesday, the 27th of September. I'm Grady Wolf, market analyst with Bell Direct. Over in the US, Wall Street closed lower on Tuesday as the release of home sales and consumer confidence data in the region sparked investor concerns over the state of the world's largest economy. The Dow Jones fell 1.14% in its worst session since March. The Nasdaq retreated 1.57% and the S&P 500 lost 1.47% at the closing bell on Tuesday. August new home sales data missed expectations, with homes under contract totaling 675,000 for the month, down 8.7% on July, and below economists' expectations of 695,000, which would have represented a lesser decline from July. The Conference Board Consumer Confidence Index also fell to 103 points in September, down from 108.7 points in August, and also below economists' expectations of 105.5 points. Both of these readings, falling short of economists' expectations and being greater declines than expected, indicate the greater impact interest rate hikes are having on the US economy to date. Over in Europe, markets closed lower for a fourth straight session as negative investor sentiment impacted global stocks. The Stoxx 600 fell 0.6% on Tuesday, weighed down by technology and automaking stocks, falling 2% and 1.2% respectively, while Germany's DAX lost just shy of 1%. The French CAC fell 0.7%, and in the UK, the FTSE 100 closed flat. The muted day in the UK follows signs that the Bank of England and European Central Bank will hold rates steady, while the Federal Reserve in the US may have another hike in store. Rising bond yields in the region are also weighing on European markets as investors opt for safer return alternatives to equities in the current market environment. Locally, the ASX fell 0.56% yesterday as interest rate sensitive sectors weighed on the key index, with the REIT and tech sectors shedding 1.35% and 1.93% respectively, as the market prepares for interest rates to remain higher for longer, not only locally but across international economies too. Rising bond yields are also weighing on the ASX as investors turn to bonds over the higher risk equities in the current market. Pro Medicus popped 9% on Tuesday after the leading health imaging company announced its wholly owned US subsidiary Visage Imaging has signed a $140 million 10-year contract with the largest not-for-profit healthcare system in Texas, Baylor Scott & White Health, or BSWH. The contract will see the company's cloud-engineered Visage 8 enterprise imaging platform, or Visage 7, implemented throughout BSWH to provide a unified diagnostic imaging platform, which with multi-phased go-lives targeted to begin in Q1 CY24. And Qantas shares dipped a further 1.3% yesterday after CLSA became the first large broker to downgrade the national airline to a sell rating this year amid the recent challenges, including the most recent fuel cost blowout announcement. On the commodities front this morning, oil is trading 1.07% higher at $90.64 a barrel. Gold is down 0.83% at $1,899 an ounce, and iron ore is down 3.64% at $119 a ton. One Aussie dollar is buying 64 US cents, 95.29 Japanese yen, 52.73 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open the midweek session down 0.34% following the slide in global investor sentiment overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has raised the price target on Pro Medicus from $70 per share to $75 per share and maintain a hold rating on the leading health imaging IT provider after the company announced the signing of its largest ever deal in the US through a 10-year contract with Baylor Scott & White Health. With a shortage of radiologists and ongoing cuts to Medicare reimbursement for radiology, companies like Pro Medicus are also expected to continue working with AI providers and researchers to facilitate the provision of AI tools in radiology. However, the company is not developing its own applications as understood by Bell Potter. And Trading Central has identified a bearish signal on Charter Hall Long Whale REIT following the formation of a pattern over a period of 40 days, which is roughly the same amount of time the share price may fall from the close of $3 $3.28 to the range of $2.50 to $2.65, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful Wednesday, and as always, happy investing.